I'm going to ask two gentlemen to my right here to join me up here. Thanks very much for the introduction. Thank you very much for the invitation to moderate this year's opening session. In a minute, we're going to get into the discussion. Let me very briefly just introduce the two gentlemen who will be joining me. Shaker just did a very good job at making me sound much more impressive than I really am. I'm not going to do the same for these two gentlemen because they genuinely are impressive. James Mwangi, to my immediate right, is a global managing partner at Dalberg, and he's joined by Joe Muchero, who used to be the head of Google for Africa, is now the Sub-Saharan Africa lead and ambassador and East Africa lead at Google. And what we're going to talk about this morning, we have about 50 minutes or so. What we're going to talk about, and again, I'd like to echo what Vinay and Sheikh just said, is that we kind of move beyond the question of why Africa is a good idea to the point where we now need to start really understanding the place. It is remarkable how much has changed in recent years. I would say the last 24 months have been particularly important for Africa. I would say the scales tipped somewhere around 2012 when the dynamic changed from Africa selling itself to the world wanting to buy the African product. Now that we've kind of done the selling bit, we've done the PR bit, we need to start delivering. So what we're going to talk about this morning are some of the practicalities of what it means to succeed in Africa. By now, given that you're here, I'm assuming that you think Africa is a good idea, but getting it right can be incredibly difficult. And now that we're seeing this momentum and swell in interest for Africa, it is more important than ever to get it right. It's more important than ever to get it right from a business perspective, a government perspective, and a development perspective. And this is what I'm going to be exploring with both James and Joe in more detail. And then I'm going to join them. And hopefully I've got a microphone. There we go. Is this on? No. Yes? Okay. So if you've ever been to, firstly I have to congratulate Ward, because if you've ever been to an African conference, or if you go to African conferences, you'll notice that Nigerians have a tendency to hog the stage. This is a highly unusual situation, but well done, because for once, it's not all about Nigeria. For once, the Kenyans have the upper hand. Anyway, gentlemen, it's been an extraordinary few years for Sub-Saharan Africa in particular. I'm sure that you've seen quite a dramatic shift. I've seen a really dramatic shift, a profound shift in how the world now engages with the continent. It's difficult to go anywhere in the world these days without Africa being very high on the priority list for people in government and business. Even the Nordic countries are now starting to open up to the idea that Africa is more than a charity case. Even the Norwegians and the Swedes and the Finnish are now looking at Africa in business terms. But with the swell of interest comes an enormous amount of responsibility to also really understand the continent and what it takes to do well on the continent. And what we're hearing more and more of now is that with all this interest, which is positive, comes a lot of ignorance as well. And what Africa needs more than anything is the right kind of investment, the right kind of policy, the right kind of partnership, and so on. But also, from an individual perspective, it's very important to really understand what the continent represents, what the opportunity really is, and how you can tap into that. And to loosely structure the session, I think we're going to call this the do's and don'ts session, which is, what are the things that are absolutely essential in terms of what you need to understand and what you need to do to start really harnessing this Africa opportunity. But what are some of the pitfalls and sort of classic mistakes that people make when it comes to trying to get involved in this Africa story in some way? I'm going to start with you, Joe, and I'd like both of you to start thinking about what your top do's and don'ts are in terms of how to get into Africa, how to stay there, and how to actually succeed. Both of you have demonstrated that it is possible, which is good, and we all know it is possible. But what I hear time and time again is that it is exceptionally difficult. So my first question, and this is for both of you, and I'll start with you, Joe, is one, tell us a little bit about what your journey has been over the last few years, helping to build Google's Africa presence, really kind of starting to tap into this international interest, because names like Google, 10 years ago you wouldn't have associated with the continent. But also, what has that taught you in terms of what the essential things are that you really need to understand and need to know?
Thank you very much for the opportunity. I would say the first thing that we've learned, as Google as myself, is that there's no such thing as Africa, other than the continent that exists and so on. It's how you look at each country. It's very different, and even in each country, you've got a lot of differences. So to give an example, within Kenya, we've got about, I think, 43 tribes. And now we've got 47 counties. In itself, it's not even homogeneous. So when you take Kenya, you take Nigeria, you take South Africa, you can't have a strategy that says this is what we're going to do in Africa. But you can have a strategy that says we're going to reach maybe all the mobile subscribers in Africa on, say, feature phones. Now that begins to bring in Africa. We've also had, from a policy point of view, each country has its own view on different policies, whether it's education, whether it's agriculture, and you can't have a one-fits-all strategy, which then means you have to try and see how to fit into every country. And I know most people know this, but you'll find that at the end of the day, it's about the people and how you actually engage with the people and how you understand them. So whoever is, for instance, the head of policy in the government, in education, whatever they think during their period seems to matter more. When the new person comes, they almost change everything again. So you need to understand people, you need to understand how they think, and that's extremely critical. The second learning, I would say,
we'll hold it there.
We'll come to that.
No,
okay, yeah.
I want to make sure you don't snipe all the good ones.
Right.
So Joe's already taken a really good one, which is you can't talk of Africa. You got to talk of countries. What would be, other than that, what would be your first pick, your top one?
He was beginning to segue into talent, so thanks for stopping me from taking that completely. A natural follow-on from the fact that Africa is a collection of 54 very diverse places is that to build an Africa strategy, firstly, as he said, you then need to start segment the continent in some way. Sometimes country is not the right way. But to do that, you need to build a team that is of the continent, in a sense. My own entrepreneurial journey, I moved to set up the first Dalberg office in Africa 7 years ago. It was myself, a phone, a desk, and 2 other people. And the process of going from that, sitting in Johannesburg, to building out a truly continental team with people from, at this point, 17 African countries, was tough, because very often you're having to find ways to track the talent, which often doesn't necessarily check off all the boxes that you're used to checking off, but there are excellent people in every country. And you need to recognize that unless you find a way to identify and attract and retain those excellent people from very different backgrounds across Africa, you will always be kind of clapping with one hand. There's some magnificent people here in this room, well-trained, great experience, but I would wager that there's many African countries that are not represented here. And very often it's perspectives from that angle that makes sense. The last thing I would add is the reason talent matters is not just what you know how to do. It's who you know and where you know. And not in the sense of you can get a meeting with a minister or, there's a connections game which I think people get distracted by. I think more important is just understanding how people like to engage and being seen to be a credible person on the ground. And that often means find the people who are actually educated on the ground in these countries and have been building their careers from scratch in these countries and figure out a way to intertwine that with the really international world-class talent.
Talent is an issue that a lot of business is frustrated by, and sourcing talent. And we often talk about this talent gap and skills gap in sub-Saharan. I'm coming right back to you, so you might as well hold on to it. Can everybody hear me at least? Yeah. Okay, great. Now, how did you address this issue? Because from what you're saying, it sounds like, look, it isn't really that the talent isn't there; it's that it's difficult to find.
And I think the word talent itself is misleading because people use it variously to mean different things. Right? Are you talking about intrinsics, like the ability to problem solve, basic analytical capacity and horsepower? Are you talking about a particular skill? are you talking about a particular set of experiences? And each of those three things is sometimes used to mean talent, but actually your solution for each of those three things is different. And so what we've had to do is say, ultimately, if you're trying to build a truly diverse team, and diverse team not because it makes you feel good, but it makes you be good and better at the job that you're doing than anyone else, then you need to ask yourself, in every team member you're bringing on board, firstly, do they have the raw intrinsics? And those are evenly distributed around the world in any population. And indeed in Africa, because, like in mining, right? If many people are exploring in an area, chances are it's hard to find good deposits. Africa is underexplored. There's a lot of people with raw potential that are readily available. Identifying and understanding that raw potential is challenging, and you just need to figure out how to tease that out. And then you need to build a team where you're not just selling raw potential, which means finding both those Africans as well as non-Africans who do have the combinations of experience and technical skills, but having a very clear ethos around the idea that, let's be clear, our goal is to build a team that is both globally excellent and locally anchored. So the short answer, understand what intrinsic talent is, recognize that you will need to invest in it over time, and pair that up with a group of outstanding, educated, and skilled people from around the world, both from Africa and beyond. No simple answer. It takes time, it takes stress, and very often it doesn't work.
I think, can I add that also your objective, what you're trying to solve, you need to really address the problem and understand it before you link it to talent. Because sometimes you're trying to use exactly the same hook maybe used in the West to solve a problem in the emerging markets or in Africa. And really that problem doesn't exist. People don't actually look at things in the same way. So you have to understand the problem you're trying to solve and then look for the talent. Not assume that you know what the problem is and then look for talent. And they'll be addressing a completely different problem. So an example is like credit cards, and the financial services that exist right now within Kenya, within the African context in terms of mobile money. There isn't a big need from the credit card businesses. They have to evolve completely differently. And in that sense, address the real problem and then hire the talent.
Joe, going back to your first point about Africa, and the need to get over, talking about this continent, which is, as we know, incredibly diverse and complicated. Now, Google does Africa, and what's been your experience in terms of, kind of starting in Kenya? Kenya leads the pack in terms of technology, in terms of the regulatory environment for technology, but of course it's very different depending on where you go in the rest of Africa. How difficult an experience has that been for Google? Like to what extent has that complicated the work you do, and how have you navigated that environment?
So I think to start with, and I hope you can all hear me, for Google, getting maybe 1 million, 40 million subscribers onto a service isn't that large. So within Google, you want to see products that come in that grow extremely fast and a lot of users. You're talking of already hundreds of millions of users. At the moment, if you just look at Kenya, we're 40 million people. Even if everyone came online, it wouldn't be something as large. At the same time, you look at the revenues that come out of Africa, it's still not significant. So the strategy we've had as Google is been to grow the market, to increase the number of internet users, to increase the level of usage. And so what's difficult about that is you've got just a small section or subsection of people in each country that use internet in the way that Google describes, 30-day actives. And so you have to just spread, and Africa is really, really wide and large. And to go to every country to get just that subset of people is hard. And you almost have to have a different strategy for each country. And you can't open offices in every country. We're a technology company. And when you look at, for instance, how we've operated in the West, it's been very different. So the difficulty is that engagement with people, and then engagement with then partners and resellers that you have to work with in order to reach each and every part of the continent. So it's complicated in that sense, and you have to try and aggregate users across every country.
James, you're nodding in agreement. What's been your experience, building a Pan-African presence? Because, some countries can be radically different.
I think our experience, and I'll also look at your experience we've seen with our clients, is operational nuts and bolts is really what can trip you up. In a sense, the key, in a difficult environment, there's a lot of things that can trip you up, and you need to walk the walk in terms of building from the ground. Let me be very, very specific. We were tempted at various points to just inject capital into a country, have a big launch of a team, and get going. And for various reasons, we ended up not doing it in different instances. And the way we've instead gone about building our business is you find an opportunity, you execute well against it, and on the momentum of that, you're going to pick up the next one and the next one after that. Now, in our case, in the professional services world, that generally is straightforward. What we found, even in looking at other African entrepreneurs, is that excellence around this building from the bottom up in a very much A leads to B leads to C way is critical. Because there's so many very different kinds of complexities embedded in how you operate in a country that if you just come in with a big bang injection of capital, I'm going to hire 20 people, 200 people, 2,000 people, depending on the scale of your industry, and I'll just get going. There's a substantial amount of risk in there, and very often you find people who haven't given themselves the runway to make mistakes, to build a team that is seasoned and has learned from their experiences, and such that by the time you get to real scale, you're ready to manage scale. So short version, don't scale too fast, and go about scaling the hard way, which is build every component really stress tested. I know you're going to be good. Go out and do something. I know this is selling, let me add to it.
Okay, so we've established that Africa is not a country, and you need to understand that. Skills and the identification of skills and human capital and the development of it. Joe, what would you add next as sort of key component of what you need to understand, what you need to do when it comes to success in Africa?
So I would say that the next thing would be, as you plan and as you look at each of the countries, your strategy needs to be extremely specific for each subset. I know this is what we're saying in terms of how you strategy people, but what we found is there's an assumption that, say for instance, Kenya, we have got the European law, and so everything is going to operate like it operates in Europe. Actually, that's not the case, which means your appetite for risk needs to be extremely clearly defined when you start. And this means from almost a PR perspective, expect that there are people who will say bad things about your organization. Whether you're doing good or bad, you're going to get bad PR. And if you're going to assume that anything that is said in a sense is true or it's the way it operates maybe in the US, then you have a very challenging time to almost do anything, because the risks associated with an emerging market are there and obvious. So you have to have a very clear definition of what your risks are, and a very clear PR reaction to any of the activities that come in. So I think examples would be where competitors might say, you're aiming to take things away maybe from the country, so making money out of a poor country sometimes would be suggestions that some countries or some media will bring about. Social media is extremely big in the continent, and it just means anything you say, there are people who will have positives and negatives. So I would say PR is probably, PR and the risk appetite, you have to define upfront.
On the issue of PR, this is a really interesting point. In our experience, it's been interesting how often it's difficult to get African governments and African businesses to sort of engage with, the media, engage with public discourse and dialogue, and one can kind of intuitively understand why that is. But of course, not speaking is probably the worst thing you can do if other people are talking about you. Would you like to comment on this, James?
Yeah, I think part of why that discussion becomes difficult is people very cleanly delineate between the world of business and the question of social impact and social improvement, right? So they think that there's a development conversation happening in one place and a business conversation happening in another. And as long as you have that separation, you end up with a number of very predictable realities. One is those who think of themselves as working in development, whether it's the government, people in government, in the kind of development community, most generally speaking, the NGOs, view the generation of prosperity as something that's either irrelevant or sometimes harmful to their aims. Whereas, by definition, development is a process of making people prosperous and giving them choices. At the same time, if you're, and I think importantly for people in this room, if you're trying to do business on a continent where the vast majority of people are faced, one, with a range of very fundamental risks to their health, food security, etc., and have a whole range of unmet needs, and you then say, oh, that's developmental stuff, it doesn't really affect my business, either A, you're going to waste your time building up strategies to target the 5% of Africa's people who kind of look like someone you could run into on the streets of Europe and the US, 5% might be a little statement. Or you're designing things for the mass market that have very little relationship to the needs of that mass market. And the thing that I've seen is that those businesses that actually say we'll stop treating some things as developmental and some things as business, will actually understand our mass consumer where they are the ones that suddenly take that path to scale and rapidly grow. Because understanding those issues and building them in either in how you manage your risks or in how you seize opportunities is really the way to capture the bulk of the market. That's where the growth is going to be, is raising those billion people out of poverty.
How receptive are your clients to this sort of message?
Very, very. It's a tricky message sometimes to hear if you've vested yourself in a particular frame of mind. If you're thinking to yourself, I'm a business person, don't waste my time with questions of access to clean water. Well, it's really hard for me to convince you that a key part of affecting the way, a key shape of the size of your addressable market for your business is the access to clean water. I'll give a more specific example. We've been working with actors in the insurance industry to understand what the opportunity for insurance is in sub-Saharan Africa. And initially, the question was, okay, how do we capture the middle class in several countries? And that is promising in the short run, but very quickly runs out of growth compared to anywhere else. The second question was, well, we hear about microinsurance. Is that the right thing to do? And you look at it and say, well, it could be, and you can just do the Me Too thing and just do exactly what everyone else is doing with microinsurance. But very quickly you find that there's a limit to how cheap you can make insurance before it becomes either not worth the consumer's while or not worth it for you as a business. And then we said, well, what about the billions of dollars that flow into the continent, targeting the poorest of the poor, but which lacks risk solutions? And it was in designing products, focusing on those flows, either from governments, from development actors, etc., where they were able to say, one, we're touching a lot of individuals, we're doing it with a relatively small number of transactions, and we're making a very measurable and visible difference. So it's not about suddenly selling people on our CSR, it's saying our insurance skill is fundamentally changing this country. And that just shifts the conversation between government and business very, very quickly.
Joe, what's been the experience at Google with this intersection of development impact, social impact, and making money? Because for a long time, the idea of making money in Africa was almost a taboo. That you would invest commercially in a place where people don't have enough food is outrageous. But now, of course, we understand that you have to combine the two if, in the long term, you're going to really sort of foster development. How have you approached this? Is this something that is sort of a conscious part of what you do, and how do you sort of manage that the balance between the two?
So I think the key word is long term. When we first came into the continent, you looked at our balance sheet and some of the GDPs of countries. Most of them didn't understand why we want to get into the market, or if we're going to get any partners we're working with, whether we're going to buy them out and so on. So we defined our strategy as both commercial but long term. So we're not looking for an immediate return. And so far that has worked, because then we're seeding the market, we're increasing users, we're training, we're partnering. But it also comes at a cost, in the sense where the partnerships that we then set up. Because again, within the continent, to try and grow alone is impossible. You have to partner with people and with businesses. And as we partner, they want to maybe make money immediately. You know, theirs is a short-term view. They want to grow their capital, and we want to do this on a long-term basis. So you have to almost find ways that intersect. So the challenge is in defining what is acceptable to the market and also to the partners, as well as even to our finance team. Because if you're then going to say you want to make money, but it's only from a small subset of users, then it is not sufficient.
Now, gents, we've covered quite a bit of ground. We've talked strategy, capital. We've talked the need to understand the relationship between development and business. Now, one of the key things that's happening at the moment in Africa is that the world is very much waking up to its commercial potential and its economic potential, which is fantastic in some way because a lot of people have been selling Africa very hard for a long time. But with that also comes risk, in the sense that there's a phenomenal amount of money out there that isn't very well informed, to put it that way. So just last week at the FT in London, we hosted a roundtable on the question of governance and improved governance. And one of the concerns that was raised was that there are a lot of people, and I quote, this was a senior Africa economist who said, there are a lot of people who don't know anything about anything who are now starting to come to Africa. This is going to be a really important challenge for the region to deal with. And what are the risks you see there? But also, how are you, as a player in the market approaching this to make sure that this interest translates into, net gain for the continent as opposed to a sort of 5 to 10 year period of confusion and very odd investments?
So I think the period of confusion and very odd investments is inevitable. I characterize, at least that's my own view. I think Africa now is at the point that the internet was in the late 90s. People are waking up to the potential. Everyone now needs to have, or more and more investors need to have an Africa strategy. More and more companies need to have an Africa strategy. And very often what they're doing is they're checking a box, stick a .com on the end of it. Stick an Africa person into the continent. Show me $100 million in deals by the end of the year. And what's happening, or what's likely to happen, is the valuations on the deals. If you're just placing capital into Africa, and you're doing it without some deep understanding or some edge, and you're just doing it on the basis of coming in at a good valuation and exiting quickly, you are going to lose your shirt unless you're one or two or three lucky ones. So there's a few who will be good, another small group that will be lucky, and a whole large group of people who will do very, very badly. Doesn't mean that Africa is not an opportunity, just as it doesn't mean that the internet wasn't a great opportunity at the turn of the century. It just means that there's a period of learning and washing up, and there's a little bit of a bubble. What do I think is critical there? I think we are coming to a view at Dalberg that it really boils down to operational excellence. Bringing a checkbook to Africa now is nice, it's necessary, but it's not sufficient. What is the operating insight you're building? What is you're bringing? What is the access to markets you're bringing? It's not enough to say I've invested, I maybe get a board seat. You need to engage at the executive committee level, potentially even at the day-to-day management level of the businesses you're working in to make sure they're operating at scale and at skill. And you need to recognize that there's a whole process of building a cadre of world-class managers and operators in businesses. That's not going to be a 1 or 2 year process, but when it's done, will really unlock tremendous amounts of value. So short version is, if you're thinking short term, you're in trouble. And if you're rushing in and on a clock to place capital, you're also in trouble.
My question for both of you, and kind of following up on that point, is how much of your time is spent, you both represent big international companies, how much of your time is spent educating your own company about what the Africa strategy needs to be? Because this is something I hear from quite a few people who, get a nice mandate from a big global brand, but then realize that actually this company doesn't really know what it wants out of Africa. So how much does that factor into what you do?
I would say for me it's 50-50. 50-50 as we get more and more people within the organization getting interested in Africa. It means you have to almost start from scratch and explaining to them what we're doing, why we're going into this product, and so on. And the difference is, Whereas in the developed markets, data is easily available and you can understand it. They've done this for hundreds of years sometimes. And you can tell this is how consumers behave. Within the continent, that data is just started. You don't even have real trends. So there's a lot of subjective views of what a strategy should be and how you should operate. And so you'll always get this question of, are you really sure this is the way the market will work? And you would say, yeah, I've been based here for the longest. Do you have data? No, I don't have data. So it becomes really hard to work within the organization in just selling a strategy and a plan. And it's really about then building credibility in small wins and showing this has worked, so trust the next one and working from that perspective. There's also the other side of, within the market, as I said, you really have to partner, whether it's partnering with the government, whether it's partnering with other businesses. And those businesses also need to understand where, say as Google, we're coming from. So why would you want to not, to make money in 10 years' time, not today? That question they don't understand. That, for us, we want to look at, first of all, the products, and then we can look at money. So you have to educate the market as well as educate the company. So my job is really sales as ambassador, to both sides.
Yeah. I think I've been somewhat lucky in that regard because I moved to Johannesburg, I moved to Africa as part of a small organization that then grew rapidly in part as a result of its engagement in Africa. So somewhat oddly, I'm neither in an Africa-only business nor in a multinational where Africa is a small piece. I'm in one of the few companies that are truly multinational, but actually treating Africa as their principal focus. And so for us, it's been much more a question of saying, this is where we're growing. This is where some of the disciplines that we adopted initially of necessity have been developed. How do you then translate that into insights for how we operate elsewhere? What does it mean for how we leverage our presence in Europe, the United States, and Asia, and Latin America as well, in ways that tie into both the lessons coming out of our experience building in Africa, as well as opportunities between those parts of the world. So it's a different conversation that way because no one at Albert needs to be convinced of the fact that Africa is critical to us. It's the biggest part of our business. But at the same time, we need to guard against either becoming too insular and ignoring the fact that there's that opportunity to be a bridge, or alternatively, just trying to gauge what's happening everywhere else. One of the challenges we ask ourselves every day is the current business model we have as a fee-for-service management consulting firm really what's suited in the long term for what's needed in the context of the operational challenges and other things that are out there? And that's not an easy question, but at least we have the license to ask it.
No,
so the devil is actually always in the detail. So Africa, when you look at strategy and you present it, it's always great at the Africa level. But when it comes to executing now in each country, about each and every product and how you're engaging with each partner, now that's where it becomes really tricky. Again, take a company like Google. If you're going to partner with any organization, you must do all the background checks and know that this is a company you can work with. Obviously, security and the rules, financial rules that have been put in the US are now affecting anything you do even in Africa. We have terrorism as a real threat within the continent, and it means every partner you have, every business you operate with, you must do background checks. We don't have all these companies that have already done the references and you can easily go and get this information. You almost need to do it yourselves, and it takes time, and the process is long. And you'll find sometimes some of the largest companies are failing. Some operators, for instance, have, maybe there was a story about someone that invested when they moved from being government-owned to private, and because of that one thing, the legal guys are saying, look, don't engage with them. But they have like 90% of the market, how can you not engage with them? So there's many different aspects that you have to really address when it comes to the real details and the processes within the company and how the company operates. And at least within Google, we're able to get over many of these things. our policy teams and compliance teams at least take a lot of time to do this even in advance. So I would say even for many of the organizations that want to go into the market, they need to build all that in advance.
Now, we spent a fair bit of time talking about the do's, and I'd like to spend a little bit of time on sort of obvious things not to do, and obvious mistakes that you've encountered and you continue to see that people make, and that sort of, can turn the best intentions and the best sort of plans on paper into nothing but dust when it comes to actually trying to execute. And I'd like to start with you, James, there. Like, what are the most sort of frequent mistakes you see people make, and what would you, advise people to really avoid?
And this is premised on whether you're trying to build for the short term or the long term. If you're trying to build for the long term, a clear mistake in my mind, which is very tempting, is partner with Mr. or Ms. Rolodex. Right? They exist in every country. If that business partner is not going to do anything really other than help you meet people and make the connections for you. Right? And in some countries it's the only way to go in right now. In other countries it's the only way to succeed quickly. And I have a hard time coming up with situations where that hasn't worked out in the long term. At the end of the day, in looking for a partner, everyone will say, yes, look for a partner. And then the immediate jump is to who is the big name in this country? Who is the, for my Nigerian friends, the Oga with the links, the connection, the Oga at the top.
I knew we would get there.
We have to talk about the Oga at the top. Whereas, frankly, what you need if you're building for the long term is someone who can operate. And I know I'm throwing out this word operating, but it's about the nitty-gritty of running a business day to day, building a team, meeting your obligations and so on, and finding those people who build credibility in their ability to do that, and sometimes taking a risk on them, because very often they're rough, they're not going to speak with the best of accents, they're not going to have a chain of degrees, etc. It's assessing for that integrity and that ability to execute, and then figuring out a way to bridge the cultural divide that may exist. That's where strong and real partnerships come from. The guy walks in and meets you actually at the 5-star hotel in which you're staying and says, all right, here are the 5 people I'll introduce you to, and here are the 3 deals you can get into. Chances are you'll get some good deals out of that. But what does it do? You're essentially building a weak brick into your entire structure for the long term, right at the beginning.
And so do that if you're short term, but not if you're long term, or never.
I think you should never be short term.
Would you like to add to that, Joe, or are there other sort of common mistakes, common errors of judgment that you see that can save people a lot of trouble, a lot of time?
Yes, I think adding to that is, for me personally, one of the policies I've got is, unless it's very clear and transparent, just don't take any money from the government. As a first. For many reasons. I mean, we had...
Are there any government representatives?
So long as it's clear, transparent, the tender was done openly and so on, then receive that money. But if it wasn't, it's in a sense always something that comes back positive. I mean, for us, we spend a lot of time within the continent working, for instance, with the electoral commissions, because we feel that it is important to give access to information to the electorate. And it means then you have to work with every, electoral commission, and there's always this temptation that they want to pay you to do X. Just do X and not receive the payment if your aim is really to get more transparency. Because the end result is there's always some media thing that will come out and you're probably being called to explain how you received X amount of money that wasn't approved. So that's it's practical and critical. And really, again, what James is saying, the people that you actually hire, you really must do a background check, be sure that they're the right people, and they have the right integrity in terms of how they will engage with the market and how they will engage even with the government and partners. Because if you have the wrong people, then there's almost nothing you can do, and you continuously keep checking people as opposed to even the market. So there's a lot of pitfalls to watch out for. So that's my opinion.
No, Is there anything you'd like to add to that, James? Other than think long term, find the right partner. Because one of the things that people sometimes sort of argue is that you have to be super local, right? But is there merit in having an international presence as well? This is something that comes up in the fund management space a lot. Is that you invest in Africa, but you're kind of based outside of Africa. How important is that to the landscape for you?
It entirely depends on your strategy. If you are based outside of Africa, look, at the end of the day, no investor in Africa should be coming into a business bringing their check and that's it. So you can be local, and what you're bringing is a deep knowledge of local markets and some way that you're going to help the team grow locally. Or you can be global, and what you're bringing is either links to other businesses that have grown like them, or access to a different kind of market, a different set of insights. The key point, though, is what is actually the value you're bringing. And I think there's just as much opportunity for what I think of as foundation layers, the people who are anchors, the people who are going to dig deep into a country and just build things that are very deeply rooted in those countries, as there is for bridge builders. We're going to be doing the interesting links between opportunities in Africa and either skills, capabilities, or markets elsewhere in the world. So it's not a linear answer, but if you're one thing, for goodness sake, recognize that's what you are and make sure you're doing that. Don't be a major multinational fund that's got a team sitting in Johannesburg making investments that doesn't talk to anyone else in your portfolio. Find opportunities to link African businesses to businesses. Then you're throwing away 90% of your value proposition right there.
We spend a lot of time selling Africa, and there's a fairly predictable checklist of opportunities that people tend to recite when it comes to investing in Africa. And we all know that telecoms is a good idea. We all know that there's this budding consumer class or middle class, depending on how you want to define it. We know the demographics are promising, infrastructure, agriculture, and so on and so forth. Now, from your perspective, what really over the next 5 to 10 years are going to be the key sectors and the key opportunities that you should be thinking about now? Because the telecom story, I would say a lot of it is now kind of wrapped up. And a lot of the investment that is going to be made has been made in the sector. And it will be interesting to get your thoughts on what's going to start coming through in the next few years that right now people might not be thinking about. Joe or James? Joe, yeah.
I can start, but I disagree about the telecom story.
Good.
I would say from international connectivity perspective and maybe national connectivity, that's been done. But last mile, there's still a huge amount of investment that is required. And I'm talking really about connectivity, the broadband to the home, fiber to the home, and then all the content and services that need to be developed. If you look at even the digital space that Google operates in for advertising and so on, that hasn't even started really, even if we have a sales office in South Africa and in Egypt. But the investments that are going to come need to be extremely clear which part that they are going to address, which is the last mile for telecommunications, and then ICT, we're talking of the data centers. Obviously, there isn't enough energy in terms of power, clean tech. That's a huge opportunity without which a lot of the telecoms and a lot of the other services will not grow. The smartphones aren't enough. I think we just started to see those coming. So the smartphones mean that the market for apps and tech solutions is going to come in as well. So it's from that perspective that I'm saying that actually telecoms and IT is really just starting. The other areas, now that we have a lot more investment going into researching, especially on mining is going to be very, very significant, and it's going to affect a lot of countries. Because I think we found oil, we found gold, titanium, rare earth minerals. There's all manner of resources in mining that is going to take place. So those are key areas I would say that people will focus on.
Okay.
Maybe it's slightly nuanced in the answer. I think that there are sectors that will absorb a lot of capital, but I think there's vast opportunities across the full range of the economy. The analogy I would use is, yes, China has invested a lot in infrastructure, for example, over the last few decades, but there's very few sectors in which if you built a strong position in China 20 years ago, you didn't do extremely well. And similarly in Africa, everything from health, agriculture, every sector is going to have tremendous growth over time. and it's really a question of understanding, how is it that you want to play. I think to me, where the real opportunity is in pairing large kind of sector moving investments. So you think about natural resources, you think about what's happening with gas on the coast of Mozambique, for example, or oil in East Africa. It's about saying that actually there's layers of investment that go around that, whether it's the principal extractor, the services directly to that, the tertiary growth that comes from hospitality, business services, etc., etc. But it's very clearly saying, how do you pair big flows of capital that are inflexible, usually, will work a certain way, with more flexible flows of both capital and entrepreneurial talent. And then, again, tapping into local entrepreneurial capability. It's much more interesting to me to say, where is it that there are enterprises that are showing the potential to go mass market, and how do you tap into them? And those exist in every sector. We've seen them in health, we've seen them in agriculture, we've seen them in energy, and certainly I think we're going to see a huge opportunity to create those kinds of enterprises in the extractive industry space, particularly in what seems to be a likely new natural resource boom, particularly on the east coast of the continent.
Right. So we've got about...
Just one more thing, is the regionalization that's taking place right now. I think in the past, you almost needed to operate in every country, but now you're seeing these regional blocks coming in, the COMESA, ECOWAS, and so on, that are creating policies that allow businesses now to start existing across different markets with the same policies. And I think there's not many businesses that are taking advantage of that opportunity. I look at the East African community, there's now many of the banks going regionally and so on, even from West Africa coming in. So you're going to start seeing Pan-African businesses. The politics is actually driving that. There's this whole conversation on the International Criminal Court that's bringing the AU together and so on. Those conversations are leading to more business opportunities that allow the businesses to scale. So I think one of the key opportunities will be for the consulting businesses, the analytics businesses, people that are going to be able to give you data and show you here exactly are the pockets of maybe consumers that you're looking for. This is how you can reach these consumers physically and so on. That's going to be also a huge opportunity just for data and information that currently doesn't exist.
Now we've got about 12 minutes left, 11, 12 minutes, and I'd love to get some comments or some questions from the floor. Just a general show of hands, how many people would like to do it? Okay, I see 3 hands at the front, so we'll take all 3 of those people, starting with the lady.
Shari Barenbach from U.S. Africa Development Foundation, and my question is, or my comment is for Mr. Mwangi, if he could perhaps elaborate a bit further about a point that he made, which I think is an important one, and that is when you were teeing up the point you were saying, and there's this emergent middle class in Africa, but in fact, so much of Africa is moving from $1 a day, $2 a day, and now you have this market that's $3, $4, $5, $6 a day, and that's a much larger swath of the population than those that are ready to go to the Westgate Mall to go shopping. And so I'm wondering if you could just really help people understand a little bit more clearly this mass market and what are the kinds of products and services that that mass market is demanding. Because I find particularly African diaspora often think that they're looking for consumers that they might find in the United States when that's maybe not really the real business opportunity.
Before James answers that, one general piece of advice on that point I would give is look up something called the middle of the pyramid, which is a study carried out by the African Development Bank, which is one of the most insightful pieces of research on exactly this issue that I've come across. We'll take the other questions and comments and then just take responses from James and Joe. There were 2 other, yes, lady in the second row right there.
Hi, Christina Ward. I'm Morton Class for 2015. I have 2 questions. One is...
If they're brief, I'll allow them.
Okay. So first is about infrastructure limitations. So Mr. Mongwe mentioned earlier that some of your clients need to think about how to address water access and other problems like that. But some business models probably have challenges to take on too much. So if you can comment on how businesses, depending on what market they're addressing, go about doing that. And the second question is about where the balance of growth will come from. Will it be largely local entrepreneurs in Africa or market entry by international players, which is what most of the talk focused on.
There's one more question down here. Yes, gentlemen.
Yep. Hi, my name is Twabina. I'm from Ghana. I work for a business development firm that does energy and infrastructure development, looking to venture into Africa. I'm a power engineer. My question to you is, I'm not sure if you're the first employees in your offices in Kenya, but you probably know the story. How difficult was the sell to get your company to venture into either Africa or to sub-Saharan Africa?
Great, thank you. I know that there were a couple more hands. I'll take another round of questions, but for now, we'll just take some responses on those. James, there were a couple directed at you, so maybe you can start and then Joe can give his thoughts.
All right, I'll try and be swift. Emerging middle class versus emerging consumer. I think it's important to make that split. An emerging consumer is someone who is meeting their basic wants on a day-to-day basis and has some disposable income after. That income is very much focused, and their mindset, particularly women who are very often the driving their expenditure decisions within the household, are very much focused on identifying ladders into the middle class. So it's it's the question of the bicycle, not the car. It's the question of risk management, savings, and so on. It's the question of investments in the well-being of the family. Everything from products to improve domestic hygiene, improve the quality of life and lighting, things like lighting solutions for the home, etc. There's a whole range of needs that any household has that the poorest of the poor just cannot fulfill. And the minute that they take over into having that little bit of disposable income, all these things become fair play. And the key for businesses is finding ways to offer real value for money at scale, because these are consumers who are actually very tough on quality. A very quick example is we looked at the market for off-grid lighting solutions in Africa, which, by the way, if every single major power project over the next few years happens on time, on scale, on scope, the number of people in Africa without lighting in their homes will slightly increase over the next 10 years. If everything gets built. Now you tell me how likely that is to happen. There's a $10 billion opportunity in terms of what people spend to light their house with candles, kerosene, etc. What we found, though, was that the users were very tough on quality. Selling them cheap crap very, very quickly got rebooted out. They were willing to pay a little premium for something that would last, because it's a major investment. It's not a disposable consumer good for them. So think about the fact that for many of them, every expenditure they make is a major share of their net worth. And then it's that question of quality at an affordable price. Happy to come back to that offline. Infrastructure deficits and how you deal with them. Off-grid solutions is one, but it's really innovation more generally speaking. It's about asking yourself what parts of your business model depend on some absolutely vital infrastructure investments, and then say, can you influence those? If not, and if it's beyond your control, then how do you mitigate? And if you can't, then don't do it. Right? Don't come in and say, well, I'll hope that things will come through. Either have a strategy for doing things completely differently, or partner with actors who can move those things. Go to Tunis and talk to the African Development Bank and see whether you want to coordinate your investment with theirs in some infrastructure, for example. MNCs versus locals, who will win the continent? Both. And I think a key part of the Africa prosperity story will have to be Africa-anchored MNCs. Where's the African Huawei, for example, or the African Samsung? So I think there's a whole range of indigenous entrepreneurs who will be the key to understanding the indigenous consumer. You don't need to educate them about the fact that, the person who is living in the city that they think about as middle class is supporting a whole bunch of rural households. They themselves are doing it. So there's that insight. But at the same time, as they begin to aspire to go beyond their borders, some of them will grow up, and others will become natural partners for MNCs coming into the countries. And then in terms of making the case for venturing into Africa, again, I had a little bit of an advantage. By the time I moved, I basically had a choice of being a principal and a partner in our New York office, or starting from scratch in Africa. And people are like, okay, if you want to do that, you can do that. It was really personal risk, but it was about getting comfortable with the opportunity and and seeing that there was a real opportunity, realistic about how long I was willing to be patient for.
So I can just continue from where he's left off. When Google was starting, I was the first employee, but I was based in Africa. So the company decided that it wanted to come into Africa, and then I was hired within Africa. So it was great that they had already taken that decision. And they've continued, we have continued as a company to continue to explore, and therefore we're partnering in actually the growth. And so that's, it's not as difficult a sale as you would have seen. In terms of where growth will be coming from, I would say that there's a third part, which is government. There's many multinationals and maybe even local businesses that are taking advantage of the opening opportunities. But I think the governments are also waking up and saying, look, we're not going to privatize this sector, whether it's the airlines maybe or the railway. We're going to find a way of making it work. So there's going to be concessions, where for a time maybe it's a private business that will run this and then hand it over back to the government. I think you need to take that into account. For the infrastructure itself, for us being a technology company, I think we're still at about maybe 150 million internet users. We would like it to be more than 800 million, and so it means there's still a huge gap. I think we're only at about 9% internet penetration, whereas we have over 15% of the world's population. We expect that number to actually grow. I think James covered well in terms of the middle class, and there's a lot of data that's available, I would say even from Google, Facebook and others, where you can go and really find out where the real consumers and how much money are they spending. So if you're looking, for instance, who are users of just Android phones or iPhones, there's actually data that's available online, and it can tell you in each country how many users those are. So it gives you then an idea of the real numbers, because the numbers published by governments or the regulators don't always reflect what's really in the market.
Now, I did say I was going to take some more questions, but we are pretty much out of time, so I'm unfortunately going to have to wrap up now. I really just want to sort of emphasize the point that the session and the discussion we've had today was all about the practical. It was all about sort of kind of getting a sense of what the day-to-day reality is of being in Africa. Sort of 10 years or sort of 13 years since the turn of the century, I think we're at a point where we can finally start to move beyond sort of saying, hey, Africa's a good idea, to starting to understand exactly what it means. So we haven't spent much time talking about the big narrative stuff, the big macro stories. And I would argue that's because that's no longer necessary. I think Africa has now convinced enough people in enough places in the world that it is, in fact, worth looking at. And I hope that this morning's session, there are plenty more things we can talk about, but I hope it's provoked some thoughts. I hope it's provided some degree of insight. And of course, if you want to follow up with any of with both of our speakers, feel free to mob them after the session. But be gentle, please. And on that note, thank you very much, Joe, and thank you very much, James, and thanks to the audience. Please join me in. Thank you.